All right, y'all. In this video, we'll be going over time frames and how to determine your bias every single day when you come into the markets. First things first, time. If you guys are worried about, oh, I can't trade in the morning because I have to work or I do this all night, so I can't really be up in the mornings, it's fine. There are 3 different sessions you could trade. There's one at nighttime, one that runs through the middle of the night, and one that runs in the morning. And if you want, you can even trade PM session around the afternoon session, around like 1 p.m. to like 4 p.m., right? So you can trade any time throughout the day. That's not an issue. So if you work in the morning, you could trade something called the agent session, which runs at night from 7 p.m. to around 11 p.m. You could trade then. And if you don't want to trade around there and you have to work or whatever and you're up in the middle of the night, there's something called London session, 3 a.m. to 8 a.m. You can trade around that time. You can even trade 1 a.m. early if you want to. That's actually a good time to trade. I used to trade that. And then there's New York session. You can wake up at 8 a.m. and trade to 11, or you can wake up at 9:30, which is market open, and trade to 11. Now, me personally, I trade 9:30 to 11, and I trade right here, micro E, mini Nasdaq, right? So I'm a morning session trader. I used to trade at night. I can trade at night. I just choose not to. Morning session works well for me. So this is what I'm working with, right? Now, you said once you pick your time, when you come onto the chart here, it is currently 9:30. Come here on a 5 minute time frame, it's about to be 9:30. Market's about to open. So if I came onto this chart freshly, right? Boom, I'm fresh on this chart, and I'm gonna start with the daily time frame, right? We're gonna start with the daily time frame. Now, naturally, I don't start with the daily time frame, but for the sake of this video, I will. So, what do we see? It looks ugly, right? All determining trend, everything we learned. What do you see right now? Consolidation. What have I always said? You don't trade consolidation. But this is the daily time frame. It doesn't really matter if it's consolidating on here or not. So far, it's chopping on the daily, so we can't really determine anything so far. Drop down to the 4 hour, right? Boom, chopping on the 4 hour. But since we are scalping, we're going to pay attention to this area right here. Now, what do we have so far? We had an uptrend and we left behind fair value gaps. What happened? It got inversed. With it being inversed, we are bearish so far until proven wrong. Formed a fair value gap right here. What happened? It held. It started distributing lower. What did it take? It took this low here. We just ran liquidity. That's very simple. What do we have here? More liquidity. From this low to that high, we have an external range high and external range low. We have buy side liquidity and sell side liquidity here. Anything in here will be internal, right? So now that we took this, we are still bearish. We are 100% still bearish. Go to the 1 hour, still find your good direction. What do you see on the 1 hour? Fair value gap, holding, distributing lower. We're still in a downtrend. What do we come here to see? Fair value gap. And what do we see right here on this 1 hour? This low here was closed below. We have a break of structure. If we are to continue the trend, we need to react out of here to continue to liquidity. So, and this is literally just me determining my bias, right? So far on the day, I am going to be short. I don't want to see price continue higher. Only way I would like to see price continue higher is if we inverse this 1 hour fair value gap, right? So I'm gonna put this up here. What I'm gonna put, I'm gonna type it out. Look, 4 hour and 1 hour for direction. Once you get the 4 hour, 1 hour for direction, 15 minute and 5 minute, you use these for levels, right? You can also use the 30 minute as well. All right. So after you get your levels, you drop, and you can use the 1 through the 5 minute for entries. This is how I use my time frames for my biases, right? Go to the 4 hour and 1 hour to figure out where I want to see price react out of. I use the 30 minute, the 15 minute, and the 5 minute to figure out what levels I want to see. And then I use the 1 through 5 minute for an entry. So for the 4 hour and 1 hour, I'd have marked out these gaps for my direction. I want to see price continue down. So 30 minute, my levels are internal highs, right? Here is me using liquidity for an entry, right? If price was to come up this 30-minute, since we are inside of this fair value gap that we reacted out of, I like to use the highs that are left from the reactions. I like to see that high. It'll be interesting sell off, but then again, like I said, if we inverse on here on the 1 hour, I don't want to see it. So this level is invalid for me. I want to see something within this level. So we're going to go to the 15-minute. What do we have? Nothing, right? Last time frame, go here on the 5-minute. What do we have? A 5-minute fair value gap that price reacted out of. I just want to see a liquidity sweep of that and for us to continue lower. That's all I want to see, right? Because like I said, 30-minute, 15-minute, 5-minute for levels. This is my 5-minute level. I had no 15 or 30-minute level. So now when the market opens, I want to see this high get hit. What happens? We sweep the high while holding this gap. In theory, we should reject this 1 hour gap and continue to these lows, right? This is also going to be considered liquidity for us to target. This is also a good target. So once you get your 5-minute level, for me, I'm going to drop down to the 1-minute for an entry. And you know how I use fair value gaps to determine my areas. In the last video, I talked about inverse fair value gaps where they're disrespected and you can still use them as levels. Here on a 1-minute is why we use an inverse for a level, right? I don't want to see price pull back somewhat. Give me an entry. And then I will target my areas. Right, I'm going to target this low over here. And it's just a bunch of lows here, right? A bunch of internal lows to come down. This is beautiful. This is what I want to see. Then you have a final low down here, which might get hit, it might not get hit, but you got the idea. So I'm going to place this. Make sure it ain't no 2-minute. Cool. I'm going to place this here. And I would just wait for price to come back. You guys see that? These two levels are it. Look at that. I'm bearish on the day. I determined my bias. I want to see shorts. My level on the 5-minute was hit. I went to my 1-minute for an entry. What does price do? We come lower, inverse this gap, and we use it for a level for an entry. And it's a perfect entry. My stop loss would have been here. And now I'm up, right? So what do you do once you hit your levels, but you're not at your full level? Okay, I'm up $500. We got a bunch of more levels to go to, but I don't want to lose profit. Okay, secure it. Close the entire thing if you want. You know what? Let me show you guys this. Here is a 1-to-1 R. I'm risking 270, and my TP right here was 270. But I didn't want to go for a 1-to-1 R. I wanted to target all these lows. When you hit a 1-to-1 R, guys, close the whole thing if you're afraid of giving away profit. It's okay to take a 1-to-1 RR. You don't need it. I mean, you don't need high RR. Just take a 1-to-1 R. You don't need all that profit. Take what you can. But another way I use my stop loss, I trail. Now, if price comes back, I secured $200. Or you can use this method. You're in 3 micros. You can just close one. Now I done secured some profits. All right. Now I'm going to make less if it goes all the way down, but I secure profits. It doesn't matter. So what is price going to do? We hit the full level, right? We hit this main full level. I'm going to secure another one. Boom. I done made more profits. Well, how much did you really secure? You were up $500. I'm up $600 and I still have another $200 in profit running. Right? That's called partials. You can secure some of your money and still leave that trade running. Right? You guys see how I use time? 9:30 market open. We picked up volume. We're about to make some type of move. And I want to be in that move. We used our time frames. 4 hour, 1 hour for direction, 5-minute level, 1-minute entry. Right? My bias and everything is set. I just taught you guys how to use time, a bias, and time frames. I just taught you guys how to use all of those. Right? And 9:30 market open, you might be wondering, okay, well, what's the good times for Asia session or London session? When you come on a chart in Asia session, you can come around 7 or 8 p.m. Now, I just like market open because it gives volume. But you don't have to trade market open. You could trade any other session, right? I will literally go back and show you guys examples. And look at that. The full trade ended up playing out. And what does it look like? Exactly what I wanted to see here on a 1 hour. React out of that gap and continue lower to this low is exactly what we did. Followed our bias, followed our plan, and you get a trade. It's that simple. It is literally that simple. And you guys should understand everything I just showed you. In the last 2 videos, I showed you guys fair value gaps and liquidity. And that's all I used here. All I use. I'm going to go over it again. And I'm going to go show you guys how you use other sessions. Coming into here, we were very bearish reacting out of gaps. 4 hour wasn't really showing too much, but that we were going down, right? That's all the 4 hour was showing. We were bearish. Come to the 1 hour. What do you see? Fair value gaps are being held. I want to see this fair value gap get held to continue lower. I'm short on the day. I want to see a short play. I don't have any levels here on the 15-minute. Only level I have here is on this 5-minute inside this fair value gap. And this is liquidity. This is an internal high. I told you guys in the liquidity video that price trends and it comes back to take those internal highs sometimes, but it continues lower. I told you guys that. That's exactly what we got here. We trended down, took this internal high, held this fair value gap, and continued lower. All the way to this external higher time frame liquidity. You see how price literally came right to these areas? And you see how we reversed? That's the external low. We took the full range low here from this low to this high. Took this full low, and now it's a high chance we're probably going to move all the way up to this high right here. Because remember, when you take a low, you have a new external low. And you also have a new external high. Now, this is our new range. Right? So if we take this off and go and see what we do, we're still bearish. We never inverse this 1 hour gap. We continue lower. We just dropped, and dropped. And look at that. Fair value gap still holding. Like, come on. Now let's go to a good session. Let me see. When was a good time? Could it have been Thursday night or Wednesday night? I think it's here. Anyways, we're going to go here. This is nighttime. Right? This is a nighttime. This is 8 p.m. You come on this chart. Let's determine our bias. Start on a 4 hour. I don't use the daily like that. Like I said, I don't really care for the daily. What do you see? You're bullish. You're obviously bullish. We're holding a 4 hour fair value gap and we're not disrespecting it. We're continuing higher. Right? We're continuing higher. You go here on a 1 hour. The 4 hour is bullish. But here on a 1 hour, you have this gap here that just might hold. What do you do when you're conflicted between 2 high time frame levels? What do? You see an area where you could possibly buy. You see an area where you could possibly short. Break down the time frames. That's shorter. That's the smaller time frame you go to, the more in detail you will get. So right now we have a 4 hour gap down here we're holding and a 1 hour gap up here that we're probably gonna hold. Go to the 30-minute. What do we see here? We have a 30-minute gap here as well. We have a 30-minute gap down here as well. So we're still gonna wait. We're gonna pay attention to what we're currently in. We're currently trading inside of this area here. And what do we also see? A 30-minute inverse fair value gap. We have multiple things overlapping right here. On top of that, we have took internal liquidity right here. So we have a sweep inside of multiple fair value gaps. We have a 15-minute gap here as well. It's just so much overlapping in this area on top of a sweep that you can't miss it. And what do we see? Break it down. We have a 5-minute high here inside of this fair value gap. So right now, I'm going to be honest. This is screaming short. This is screaming to us short. We done swept liquidity, took this high as well, and we're holding so many different types of gaps here. Now, right now, we're bullish on the 4 hour and the 1 hour, but on the lower time frame, it's telling us we might have to end up reversing. To be safe, you're going to look for levels where price can reverse here. So you're going to go to the 1 hour. You don't have any gaps. You're going to go to 30-minute. This gap is not completely closed yet. The gap is still active. Go to the 15-minute. You have a 15-minute gap here. Pay attention to what price does here, right? So, like I said, you're going to go to the 1 minute and 5 minute for entries. Right now we have a sweep. And we have this 1 minute, right? We have this 1 minute fair value gap. We want to see this fair value gap get inversed and take it down, right? This is my model. If by the end of this course, you will understand exactly how to use it. Now, I'm not going to explain why I'm going to use the 5 minute yet because it is very advanced. But the 5 minute is going to be the gap we're going to use. So we're going to go forward. Right now it's holding. But all of this up here is holding as well. We inversed it on the 5 minute. Use the inverse level for an entry. Ride the trade down. Mark out your levels and let the trade ride. What do we have here? We have an internal low here. We have an internal low here. And we didn't make any highs. So we have this internal low, and then we have this external low way down here. So what can you do? You could just be safe. You also have a 5 minute gap right here. That price might hold, right? Just be safe. You have this 5 minute gap as well. Place your trade. And you guys see how this is nighttime. I'm breaking it down. It's nighttime. It's not 9:30 open. It's literally just 9 p.m. You can still place these trades. Look at that. Levels are hit. What am I gonna do? I'm up $1,000. I don't want to lose this. Don't close a trade. It's okay. You're up. You're up 2x what you were risking, right? And if you want to take that risk and hold it, hold it. Don't be scared. Or do this move, which is my favorite. Close half of it. Boom. Now I just secured $500 and I still have an extra 500 running. We're just going down all the way down here. Come on. We're just holding this trade. I'm up another 1,000 after securing 500 already. And now I'm going to trail my stop loss for it to secure 800 if we pull back. Look at that. We're just coming down. Trail your stop some more. Secure 1,000. Make sure you have 1,000 secured at this point. This is beautiful. And at this point, just keep going. You have caught the entire drop all the way down at this point. Cool. You 4x'd your return. Out of that whole trade, I secured 1,700. Imagine I didn't take the 500 up here. I would have been up way more. Use any session you please and break down your time frames. I cannot stress that enough. Break them down. It is not that hard. 1 hour daily, 4 hour, 1 hour for direction. 15 minute, 30 minute, 15 minute, 5 minute for your levels. And use the 1 through the 5 minute for the entries. That's all you have to do. That is literally all you have to do. Be ready for the next video because we're going to get into depth about something you guys are definitely going to need.